Hi, good morning. This is Joanna Nelson, and I'm on the finance team for the State of New Mexico's Economic Development Department. And we have our whole team gathered here today. Juan Torres, the finance team director, as well as Crystal Clearwater, finance development specialist. And we're really excited to have you here today to introduce to you our newest program that we're really excited about, called the New Mexico Credit Enhancement Program. So thanks for your time. Hopefully this will be valuable to you and you can take it back to your respective organizations and communities and use this as a good tool to help strengthen the businesses in your area. So before we get started, I just wanted to point out a few things. This webinar is a part of our New Mexico Economic Development Department's finance team webinar series. We do these every other month and address topics that are relevant to our programs and are educational in nature. And if you ever miss one, they are recorded and preserved on our YouTube page. So if you do have to jump off for any reason today, we will send the link out to our YouTube page, and we'll also send out this PowerPoint presentation to all registered participants. So that YouTube page, if you haven't gone to it, just Google YouTube New Mexico Economic Development Department, and it has some helpful resources from webinars that we've addressed in the past. And we will be taking questions, so feel free to type your questions in as we go. In your GoToWebinar screen, there should be a little gray box to the bottom right of your screen, so feel free to type those questions in, and we'll do our best to get those answered by the end of the presentation. We did a lot, about 90 minutes for this presentation, but I don't think it'll take too long. But we will open up the presentation for questions at the end. So before we get started, Crystal Clearwater was going to give you a little bit of background about our team and what we do.
Thank you very much for that, Joanna. Hi, everyone. As Joanna said, I'm Crystal Clearwater of the Finance Development Team here at the NMEDD. And our goal here is to create and retain jobs in New Mexico. We utilize a lot of tools to help businesses expand, relocate, start up, or prevent shutdown. And we do that by providing in-depth consultations for businesses and startup companies. We can provide analyses of financial statements. We can collaborate to find solutions with resource partners like the Manufacturing Extension Partnership and the New Mexico Small Business Development Center, along with federal and state agencies. We can help find funding through federal and state programs offered by the USDA, NMFA, SBA, and others. Develop financial packaging combinations that may include debt or equity financing and access to capital through various lending institutions or programs. And we can even perform incentive and tax credit analyses to identify cost savings opportunities for businesses. So that's some things to keep in mind. Next slide, please. So some of the programs we offer here at the NMEDD include the Local Economic Development Act program, or as many people know it, LEDA, which allows us to assist businesses who manufacture or are economic-based companies. This is a gap-filling program that helps companies relocate to or expand in New Mexico by reimbursing a portion of the costs incurred for land, building, or infrastructure. Collaboration occurs between the state and local governing body to get LEDA funding to the company. We also have the Rural Efficient Business Program, which helps small business owners learn if their operation is energy and financially efficient. The program promotes cost savings through on-site energy assessments provided by the Energy, Minerals, and Natural Resources Department. Our team can also provide a financial tune-up, which could lead to additional cost savings. The Credit Enhancement Program is what we're going to be talking about today. That's a gap-filling solution to companies that want to use a loan to make a business-related purchase, obtain working capital, pay for franchise fees, and other stuff. Juan and Joanna are going to share more on that program later in this presentation. We're conducting this webinar today as part of the New Mexico Funded program, which is managed by Joanna Nelson. Funded brings together local, state, federal, and other funding entities to find financial solutions for complex community or governmental projects. This is very, very helpful when a local community is working on a large-scale project that is multifaceted and has many needs, such as maybe they're trying to build sidewalks and put in landscaping, and they need access to water and other things that all may kind of be different and need different funding solutions. So that brings all those different agencies to the table, all those different entities to the table to find those solutions. The New Market Tax Credits Program is something we support in collaboration with the New Mexico Finance Authority, or NMFA. We recently had a webinar on this program, so be sure to check that out on our website, gonm.biz. The New Market Tax Credits Program was established to provide greater access to financing for new, expanding, or relocating businesses in underserved areas across the country. Projects eligible for funding must be located within qualified census tracts that are generally located in highly distressed areas. These are often non-metropolitan areas that meet specific requirements pertaining to impoverishment levels, income, and unemployment. The EB-5 Foreign Investor Program allows eligible entrepreneurs to apply for a green card if they create or preserve 10 full-time qualified jobs in the U.S. and make a substantial capital investment into a commercial enterprise within the U.S. As the name implies, we do work with an EB-5 regional center designated by the U.S. Citizenship and Immigration Services to facilitate that program. With that, I'd like to hand it over to Juan to give us a little background and tell us how the New Mexico Credit Enhancement Program got started.
Thank you, Crystal. And I guess I should point out that we got to update that slide because the opportunity zones were just uploaded to the Department of Treasury. So we're hoping to hear very soon about that program and try to help communities and companies figure out how to utilize the Opportunity Zone program. But good morning, everyone, and thank you very much for inviting me here, Joanna. I'll talk a little bit about where the money came from for this program. So the funds that we're using to fund this credit enhancement program initially started through the State Small Business Credit Initiative, which was an offshoot of the Small Business Jobs Act of 2010. We had a program through our partner, the New Mexico Finance Authority. They had set up a collateral support program, and we managed to run through that over a number of years. Towards the end of the period of time when the SSBCI program was coming to an end, we were directed by the secretary at the time to come up with more innovative, creative ways that we can utilize these funds. And so, and the funds that we did receive were $13.1 million. So as a result of that directive, we created the Catalyst Fund. It's a $5 million fund-to-fund that will generate over $40 million of leverage and is currently almost fully subscribed. So it's very popular, and that information can be found on our website. We still have a few collateral support program loans that are in repayment, and we started the Small Business Innovation Research grant program to assist technology companies in their trying to access credit as they move from R&D to fully functioning companies. And again, there's more information about that on our website. Today, Joanna is going to tell us a little bit about the Credit Enhancement Program, and that is an attempt to provide a streamlined solution to filling a gap in a project. But again, These are all federal dollars that we have repurposed. There's no state dollars associated with this. So we are able to kind of be a little bit more creative and expansive in the activities that we engage in. We invite your feedback and questions regarding the program, or feedback if you're involved and how that's working. We've got one loan closed and we have several in the pipeline. So I encourage you to give us whatever feedback you might have after this program and how we might be able to make this an even more effective program. So with that, I turn it back over to Joanna for the meat and potatoes of this presentation.
Thanks, Juan. So piggybacking off of what Juan said about the monies that the state of New Mexico received, we received $13.1 million at the beginning of this federal program. It closed, the program closed last year, and we were presented with the idea that what are we going to do with this money? How can we create a valuable program? So what we did was we surveyed lenders in the state of New Mexico to see what their feedback and what their ideas were in the idea of the business lending landscape. What challenges did they see? What issues did they have with programs that were in existence? So we could create, like Juan said, an effective program to have the biggest economic impact in the state. So overwhelmingly, we heard from New Mexico lenders that they weren't able to make deals and close the deals that they wanted to for businesses because there was a lack of creditworthiness and a lack of collateral that existed. And I thought that this quote was pretty telling that we pulled out from the survey. You know, we do hear a lot on a day-to-day basis working in economic development. It's often said that businesses don't have access to cash. They don't have access to capital. But one of the lenders pointed out, you know, it's not an issue of access to capital. We have plenty of capital to lend out. It's finding those bankable projects, finding those projects that have enough collateral and enough credit to close the deal. So that's where we felt like this program could be effective and help support projects and businesses that are struggling to cross that hurdle of creditworthiness and collateral. So that's where we decided to go into. So to give you an overview of the program, it's been mentioned already before, but this is a gap assistance program in the way that businesses overwhelmingly, and this is considering startup and expanding businesses, struggle oftentimes with finding 100% collateral to be sufficient for a bank to make a business loan. So the idea behind the CEP is that we can purchase a certificate of deposit, a CD, in a lending institution to cover that collateral shortfall. And we can participate a certain percentage point, and we'll get into that. But we can, well, here it is. We can participate up to 50% of the loan principal value, depending on the qualifying criteria that the business meets. So this essentially could be a really good tool to address the problems that are in existence in New Mexico, closing those deals that otherwise couldn't be closed. And the point to make as well here is that this program doesn't necessarily help the projects that are just unbankable through and through. It's not making a bad project good. It's making those projects that are decent that just need help in the collateral area. So that's something to consider too. It's not addressing business planning deficiencies or management deficiencies. This is specifically focusing on collateral. So the idea behind SSBCI as a federal program was, in a sense, created around the time that local economies were reeling from the economic recession. And the mission was to address the tight reins that the lenders had put on their lending practices and to help them become more liberal with their lending. So that's the whole idea behind the original federal program. We decided to carry on that mission in addressing maybe deficiencies or tighter lending practices to reach what are called underserved economic markets. And we have come up with a number of targeted markets that we want this program to specifically help. And by bringing these to light, we're showing that we're putting more weight on these variables if a borrower exhibits these traits. So to support those underserved markets, we are including the following groups. The business owner is a minority owner, which basically means non-white. The business owner is a woman, a veteran. The business is located in a rural area, which we're using the definition of under 50,000 in population. And the area that the business is located in is an economically depressed area. It has a low to moderate income in the area. So those are the demographic things that we're looking at. And then as a department, we do have direction to focus on specific industries. So we are continuing to place emphasis on those industries, which include manufacturing, green businesses, economic-based businesses, which generate at least 50% of their income from out of state. So we're putting more weight on those variables. And then as well, if the project does create jobs, that's extra incentive and extra weight. So these are our ideal traits and characteristics of the project. However, sorry.
Well, I just wanted to very quickly address the question of the groups and the locations. What informed that focus specifically was that as we looked at surveys and we looked at lots of data points, those groups and the locations exhibited a number of factors which tended to limit access to credit for a variety of reasons. So there are a number of studies that were done that women business owners get less loans or loans for less amounts, as veterans, as minorities as well, that businesses located in geographic locations that are rural have a harder time of getting loans. So I just wanted to point out that, and that was a lot of research that was done by Joanna, that these targeted groups and these targeted areas have a data behind them that say there are hurdles to accessing capital in those areas for those groups, and that's what this is trying to address.
Exactly. Thanks for pointing that out. And then I'd like to also mention that these by no means are exclusive, meaning that if a project didn't hit on any of these traits, it doesn't mean that the project is ineligible for the program. These qualifiers and these guidelines are very loose, but these guidelines help us determine our participation in the loan deal. So I mentioned that our max participation is 50% of the principal. So ideally, the project would hit on many of these factors to get up to that 50%, that maximum participation on our end. If a project didn't hit on, very few of these or hardly any, they could still enroll in the program and we could participate. It would just be at a lower percentage point of the principal. So I want to point that out. This is a guideline of considerations as well as how we determine how much we can participate in the loan deal. So as you can see, this is a very loose interpretation of our guidelines, but just wanted to put this up here for you to see. If it's a targeted industry, our maximum participation is $250,000. We are putting a cap at the low end of our participation around the $20,000 to $25,000. So there is a minimum that we can participate in, and then you can get an idea of somewhat where that percentage participation is based. And it's also important to point out that this program is created like a revolving loan fund, meaning that for it to be successful, we need to get our monies out of the deals as quickly as possible in order to be able to participate in as many projects as we can. So there's incentive and there's more weight on being able to release our funds from each respective project under a maximum length of time being 3 years. So this is ideal for projects that have shorter lifespans, like a line of credit or an equipment loan, that are under 2 years. However, I'd like to point out that what we've seen the banks do, or I should say the lenders do, is that they'll have a longer note. Let's say, use the last one that we did as an example. It was a 7-year note. However, the borrower will have paid down our participating amount by 2 years. So even though the loan will be in effect for 7 years, we can have our funds released within 2 years. So the bank is okay with that as well as us. To get an idea of the timeline and the process, we did create this flow chart, and hopefully you can read it. And we do have this on document form, so we can send this out. We wanted to be really clear about how long our process is and the steps that are involved in it. Because what we also found out from our survey and our experience is that a lot of lenders and oftentimes business owners have a negative perception of government-run guarantee and lending programs, because they often have perceptions that they're cumbersome or they take too long, they're too complex. So we really wanted to make improvements on our end and make every effort to work with the lender and the borrower to have a speedy, efficient process. So to lay it all out there, I think it's a good idea to understand the process at hand. The first important step is that a lender has to enroll in the program. And that is, just to share, we as a state entity, as a government entity, have to have that lender registered as what's called a vendor in our world. And so we need certain information like a W-9, we need the ACH routing and account information. So all of that information from a lender has to be collected on the front end, and then we send it through our flow of process on our end. So that can take around 30 days, and that's approximate. Sometimes it can be shorter, but we want to get that done out of the way as soon as possible. So it's advocated and suggested that interested lenders enroll in the program early, maybe even before they have a project, in order to shorten this step. So, and I should point out too that banks are able to enroll as well as CDFIs, and we have had several CDFIs enroll in the program, and they're just filling out information about their elected lending institution that they use that we would deposit the CD in. But that's first and foremost the first step that we have to address. The second is that the lender would submit an application that we're calling the enrollment form into the program. So this is the actual application that's addressing the loan amount, the collateral that is on the table, and other defining information about the project. As well, with that application, we're also collecting information that's basic to the lender's analysis that they've used. An example would be the business plan or the projections or the financials. Because, I'll bring it up here, is that we will do an analysis on the project to determine its viability and the feasibility, but we're putting a lot of emphasis and a lot of weight on the analysis that the bank is doing, because we're basically going back to them and saying, if this is an okay deal for you guys, and it's just for the exception of the collateral, we're depending a lot on that process. However, we still we'll do the analysis and on our end, but it's not as extreme as the lender's credit analysis. So we will get that information, and I want to point out too that the application is very simple. It's 2 pages, and it's basically, like I mentioned, summarizing the defining info and data from the project. So after we receive that information, our finance team does the analysis, and then we give our summary to our CEP review group. And when we created this, we said board, but I think it's even more informal. It's not an official board. It's a group of people that we've gathered together that have experience in lending in New Mexico and various perspectives. And they review the documents, and they give us their final approval or non-support within 5 days. So that decision that we can participate in the deal is made essentially within 5 days. So we get back to the lender and give that decision. So step 4, once the lending institution has the yay or nay, green light or red light, they then can begin that underwriting process. And once the loan is finalized and we have those documents, then we, the department, get with the lending institution, and we sign a formal agreement between us and the bank. And basically, it's identifying the terms of the loan, the amount of our participation. It's identifying, the borrower. It's identifying all of the legal aspects. It also goes over what happens in case of a loan default. It's identifying all of the ins and outs of the legalities of the project. So that's signed, and then our money is wired to the bank. And we have set up a reporting requirement that the lender reports to us on a semi-annual basis on the principal amount and the current status of the loan. And then we're also requesting annually to have a business report to NMEDD about particular economic impact data that we're interested in, being mainly job creation in private investment capital if that has been gained or lost. So we're excited too about the potential to be able to track the health of some of these businesses. So within those steps, that's a rough overview, giving you an idea of the steps at play. If the groups, the review group in the department give an approval to support a project, that approval could last up to 90 days. That's good for 90 days because, something could happen on the lender's side that the project takes longer. We've also been asked as well that we had a situation where the bank's project needed to move faster than we were able to move. So what they did was get an oral confirmation for us that we could participate. They went ahead and funded the loan, and then we came in and we signed all of the documents on the tail end of that. So there's a lot of flexibility in this process that we are more than happy to negotiate and figure out and talk to the bank to figure out how best we can be efficient and meet the timelines and schedule needs of the project and the lending institution. So to recap, here are the forms that are required for the program. The most being, and it's not even that much, but for the lender to enroll, a simple W-9 form. There is an ACH form that they fill out with their routing and account information. And then it's also necessary on our end to have a letterhead document that just says by the signer, repeating the account and the routing information. Then there is the application that's signed between the borrower and the lender. Then there's that legal document, the collateral deposit agreement that's signed by the lender and our department. And then in the case of default, there is a submission form that they would submit. And then there's also the economic impact report due on the loan anniversary date to our department. And all of these forms are available on our website that you can use this hyperlink to go to. And if you're just looking on our website, it's if you go to the finance team development landing page on the right-hand side, you'll see credit enhancement program, and you can go there and access all of the forms. It might seem like a lot, but they're very, very simple forms and easy to follow. So that pretty much is a summary of the program. And then I'll look at questions to see. And then am I missing anything, Crystal and Juan? We kind of flew through that.
I think you got it covered very well.
Yeah.
Okay, and we do have some questions, so I'll read them out loud. Is there an information brochure that we can provide to the lending institution to encourage signing up in advance? So we are in the process of working with our marketing firm, or not our marketing firm, but our marketing division to get some more polished collateral to be able to hand out within your communities. We have a simple one-page document that I'll attach that to our PowerPoint that we'll send out that we've been using as our promotional informative piece, and it's just a one-page document, kind of like an FAQ that summarizes the program. So we do have that more polished material to come. But I'd like to just use that question as an opportunity to say that our promotion and marketing of the program is our biggest next step. And that's why, one of the reasons why we're having this webinar is we have to get the word out about this program. And essentially, it's coming down to the lenders being aware of the program. Because as you know, within the lending world, there's quite a bit of turnover and programs come and programs go. So we need help getting the word out to them for them to enroll in the program. So if you are an economic development organization or you represent a government ED operation, we need help promoting this program to whatever lending connections that you have. And it's also a chance to say that we have had inquiries from businesses directly that have heard about the program, and that's perfectly fine. However, most of the discussion ends with, well, have your lender contact us, because as I mentioned earlier, we aren't really getting involved on the approval at the front end of the project, if that makes sense. So we are needing to get into the discussion after the lender has vetted the project somewhat and analyzed the project. And so our valuable discussions are coming directly from talking to the lender more so than the business, if that makes sense. So helping us connect with the lenders is a fantastic way to help connect us to the project. So, oh, sorry.
So we just along those lines, we will be, I think we've been invited to make a presentation at the New Mexico Bankers Association meeting June 7th through the 8th at Sandia Resort. So we will be there. So we have that as our target period for having some very cool marketing materials done by then. So June 7th through 8th at the New Mexico Bankers Association meeting. And I think we've also been invited to the Small Business Development Center's quarterly leadership meeting, and we will be getting the word out there. So we watch for our presentations at those two events.
Right, and that kind of leads into the next question. Savannah had a question about how are you sharing this program with potential lenders? How can we help get the word out? And Juan just hit on it, the Independent Bankers Association, the Small Business Development Center. We have talked to the SBA as well. So slowly but surely we are connecting with particular groups that this would be of interest to. And we've done our fair share of cold calling banks that are approved lenders from USDA and SBA programs. And that being said, you know, you can meet with one person, one lender, or even a few, but it might not infiltrate the entire banking institution. So your help, as I mentioned, could be helping us connect with the lenders in your areas. And especially this program has been really successful, if you look on a national scale, helping those independent banks. So the smaller community banks, the CDFIs, this program can be really valuable to them. So we had a question from Michael at the SBA. How many lenders are currently signed up for the program? Right now, we have several applications in the pipeline, which means we've received their applications and we've submitted them to our Department of Finance Administration. And so we have technically 3 organizations that are signed up, and then we have several in the pipeline. So very small. We're just starting out, and we'd like to enroll more, obviously. So, and then the next question is in line with that as well. Is there a list of lenders who have already joined the program? We haven't compiled that yet, Debbie, but we will have a list of participating lenders, and that'll be available on our website, and it'll be information that we're able to disseminate, because that's one of the advantages to the lenders, is that they'll be identified as participants, and borrowers and interesting entrepreneurs that are curious about the program can see that list of identified lenders that they can work with and pick from if they're interested in utilizing the program. So we'll have that available. And I think that's pretty much those are the questions. If you have a question, feel free to type it in. Do you guys have any closing remarks, Juan and Crystal?
I would just say that I appreciate everybody's time and attention. I would, personally, I think that the focus on veterans and women's businesses are key, especially with the veterans, especially with a women veteran, because often we hear about products, we hear a lot of rhetoric about helping veterans, and this is actually a program that is very simple, straightforward, and if you know a veteran borrower who's looking to do something, could really help on the collateral side. So I would just kind of emphasize that. Just want to thank Joanna for all of her work she did to develop and stand up this program. This is literally just kind of the baby steps. As she mentioned, we're putting a lot more things on our website. I think by the middle of the summer, we should have this thing rolling well and have a very nice, robust section of our website that addresses enrollment, as well as forms and frequently asked questions. So look for this. Again, this is just the early stages. We got one closed, a couple more that may be closing soon. Interest is starting to peak and pick up, and so we are very encouraged by the response, and thank you very much.
Yes, and just to point out some upcoming events that we have in our team, in our department, we will have a funded webinar on May 23rd that will be addressing Department of Transportation's funding programs. So you can register for that, that's free. And then if you are located in the southwest region of the state, in the Deming area, we're going to have our next Rural Efficient Business Program May 30th, and that's open to any businesses in the region, as well as agricultural producers that are interested in reducing their energy consumption. And it'll be a resource fair of types that they can connect with utility providers and engineers and sign up for a free energy assessment, so they can go to their place of business and have a report showing exactly where they're losing energy. That's coming up May 30th in Deming. That's a free workshop. And then our funded meeting is coming up June 5th. So you can apply online. That'll be in Albuquerque at the Mid-Region Council of Governments. And then our next finance team webinar will be sometime in June, and we will be talking about how communities can register for or sign up and be a part of the local growth or the LOGART, Local Option Receipt Tax Program. That's the local expenditure and the local program of our state LEDA dollars. So that's exciting, and that'll be unrolling in June. So again, thank you so much for your participation. We will send this presentation out to you today, and please get back with us with any feedback, any follow-up questions, any ideas that in ways that you can help us promote the program. And we look forward to having the opportunity to work with you on some exciting deals in your area. So thanks so much. Take care.